Well, stocks sank yesterday in a market sell-off amid fears that a recession could hit the U.S. economy with uncertainty around President Trump's tariffs plans. Joining us right now is Ron Kruszewski. He is the chairman and CEO of Stifel Financial. And Ron, heading into this year, 2025, Stifel had the lowest S&P 500 target on the street, I think 5,500. So maybe this doesn't come as a huge surprise to you. What do you think about what we're seeing?
It doesn't come as a surprise. But, in December, amidst all the euphoria of everything, we thought that the market, was highly valued. And so this doesn't come as a surprise. The speed at which we got here comes as a little bit of a surprise. But look, everyone needs to relax a little bit. We're taking a little bit of air out of the balloon, but we don't see a recession at this point. President Trump, He's making an omelet and he's breaking some eggs. What did we think was going to happen here? I'm not really that surprised.
Do you think that this pullback in valuations makes things a more attractive entry price, or do you think that there is more trouble to come? We're at 56.14 right now, which is pretty close to the 5,500 that you all had anticipated for the year for the S&P 500.
Yeah, I think we might be in a trading range. It depends on sector here is really what you have to look at. What you've seen here is the big tech stocks have gotten hammered. By the way, so have some other sectors. I can talk about financials, which I think is a buy here. But, I think let's not forget that but 4 years ago, the S&P 500 was, 3,200? We've almost, we certainly doubled that at the peak here. And this is a normal a little bit of a correction, considering what is going on with the new administration. Well, heck, we haven't even been in the new administration by 2 months, and Trump is doing what he said he would do, and the market doesn't like uncertainty for sure. Yet valuations are still, they've gotten more reasonable certainly in the last couple of days.
Well, let's talk about some of the sectors you do like, starting out with financials. There's been a big pullback since January 20th for the major banks. If you look all the way back to the election, you've got some companies that are still up. I think J.P. Morgan and maybe another one or two of them are up since Election Day. Here's what we're looking at. Since Election Day, you've got J.P. Morgan and Goldman Sachs, also Capital One, all higher from Election Day, even though they have been down since the inauguration.
Yeah, look, financials, first of all, when you look at the overall market here, when people are talking recession and they're talking how tariffs are going to cause a recession, I've certainly, at some point, we will have a recession sometime in the future. I know that. But today, credit is not a problem. We've channel checked with all of our banks. Credit's not a problem. The yield curve has normalized. Banks are earning mid-teens return on tangible equity, dividend yields of 4%, trading at 60% of the market multiple. This is a good time to buy financials in this market for sure. I think what's really going on here a little bit is that people are recognizing that AI is a general, productivity tool. It's good for the people. It's good for everyone. It may not be the best investment in terms of airlines and railroads. When you look back, they're great for the economy. They weren't necessarily great investments. And so you're seeing a little bit of some realization that maybe all this tech spend, that return on investment may not be what investors thought. But look, this is normal. I think this is a normal market. I wouldn't panic here.
Your guy, Barry, has had some good calls. Barry Bannister, he's bullish when a lot of people were not bullish for a couple of years. He was not that bullish for this year, Ron, and it was before this most recent I don't know what you'd call it, revaluate. I'm trying to be nice, but it has not been...
Taking a little, Joe, taking a little air out of the balloon is all we're doing.
Taking a little air out.
And look,
so his analysis, I don't think his analysis was based on tariffs or bad fundamentals. I think it was just based on the market is ready for something like this.
Well, look, the market was up. The last 2 years, the market's been up, what, mid-20s? We didn't think that this is not the 1990s. We didn't think you're going to have 3 years of 25% market gains. The earnings, what, the S&P will do 250 this year. The stock, it's at 5,600, the S&P 500. That's a 22 times earnings in a market where the 10 years yielding 425. This is the market's, getting to be re-rated here a little bit and just taking, like I said, a little air out of the balloon. But there are sectors, including financials, that I would be buying here for sure. Call me back in a couple months and you can tell me I was wrong. I don't think so.
I mean, Barry Bannister, is he like a superhero? Does he? That was like the Incredible Hulk, wasn't it? That's your guy, right? Is he still there? You're not talking to him up that.
Of course he's. I talked to Barry this morning. I talked to him a lot.
Okay.
He's taken a little bit of grief here on his 5,500 call. As you said, it was the lowest on the street.
Yeah.
Look, I hope he's not right. I'd like to see the market higher.
Hope your
but
God's
the
not
basic
right.
understanding.
Oh my God. Okay.
Well,
for the rest
I run an investment bank.